Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On tonight's show, I have June Bailou of 10 Cap. I'm going to ask her about the stocks that she likes or she now doesn't like because of reporting season. And then we're going to do a bit of speed dating where I'll throw a few stocks at her and see whether she likes it or not. Quick answers on whether yes or no for those stocks. Then Paul Rickard and I will discuss the big cap stocks. They're coming off the boil. Where is that money going to go when they sell the CBAs, they sell the Wesfarmers, those big cap stocks have done very well. Where is that money going to go with the small and mid cap companies? Paul and I will discuss that. And finally, I've got a special guest called Andrew Wilson from a company called Rail. And he's going to talk about all the scary things and the sensible things you should be doing with AI. AI is both an opportunity and a threat. This guy knows all about that. That's the show. Let's kick off now with June Bailou of 10 Cap. Okay, so reporting season largely over. You've seen a lot of companies that you're invested in and others you weren't invested in. What were the big realizations and what were your actions as a consequence of those realizations?
Absolutely. I think the realization or the big one is that something actually you and I have been talking about for a very long time is the small caps. The small caps are finally catching a beat, and their earnings have turned out to be a whole lot better than the top 20 companies. A lot of volatility or the big what do you call it, the bombs and the traps, all in the top 20 companies, and particularly some of those are previous high quality businesses that everyone wanted to buy into. So that I think that's the big one that's really interesting. Market out of the reporting season, market is now become a little bit more conscious of expensive companies versus cheaper.
Yeah.
So there's a valuation thing, but that only really happens in the larger end of the market. In the smaller end, valuations still matter not as much. And it's really about, do you deliver the earnings growth? If you can, we see this rapid increase in share prices.
What you're really saying is that there's a bit of an escalation of that rotation out of the largely big cap stocks that were chased for sometimes what we might have thought excessive reasons, and now there's being a people are taking profit and looking for the good value in the smaller and the mid cap companies. Is that the fair call?
Yeah, that's pretty much it. However, we do have to isolate a few growth companies in the smaller end, and they continue to do very very well. Actually, some of them are not so small anymore. They used to be small. So things like like 360, the Z was so they do look expensive, but the growth is so hard to come by. So investors chasing either your cheap stock, the earnings that going to grow next 12 months because of the interest rates lower, or your growth stock and you continue to grow your market share.
Okay. So you mentioned Zip, didn't you?
Yes.
So do you think payments companies are now in a much better space in a lower interest rate environment?
Oh, absolutely. I think it's the payments business has really gone through its many iterations of growth and trough and everything else. And now you see the business model really maturing, as in they finding the ways to to really grow profitably. So in the old days, it was just about top line growth, and then they don't really make any money. And these days, if you look at Zip, for example, in Australia, the yield growth has been very very impressive. And then even in the US, in the buy now pay later space, they growing at rapid rate and they all very profitable. So I think you combine that together, you certainly see the payments companies turning the corner. The ones listed in the US, the Sezzles and others, they all up significantly so far this year. Just a sign that these companies have found its niche in this sort of space, and then US consumer is actually gravitating towards those products very rapidly.
Okay, I've been asking you and begging you to give me positives on Tyro, and Tyro started getting positives. It got as low as what 75 cents. Now it's around $1.22, and that's because there's a bit of buyer interest. Though the so-called buyer interest in Tyro, is that basically reinforcing what you're saying that payments businesses are in a much better space now?
Yeah, payments-based sector is definitely looking more attractive now. The space where Tyro operating in has been really hit by regulatory changes and some of the reviews that's taken place into this area. But however, we are moving past it now. Things operating environment is getting better compared to what it was last few years. Another interesting name in that space is a little company called Cuscal, only just listed, but it also gets a clip on every payment that gets made here in Australia. So that's another name I would add to the list.
Okay, so just say it again and give us the ticker code if you could.
Yeah, ticket code is CCL. It's like the old Coca-Cola ticket code. So
Yeah.
Cuscal. So the company, this Cuscal little company, listed in December last year. It's actually jointly owned by many regional banks, union banks, unionized banks, and everything. And small free flow has been listed recently. And the company is operating very well because it gets
Yeah.
clip for every digital payment that gets made. And then so Tyro, people like Tyro and everything, is actually a customer of Cuscal. So so it's actually quite interesting.
Wasn't it funny? I've always called it Cuscal, but that's my Australian pronunciation. And so
You might be right. So
it
maybe
doesn't matter. It doesn't matter. We got the company, we got the ticket code. That's fantastic. Now, but what has been your either your additional accumulation of a stock because of reporting season, or a new one that you bought because of reporting season?
Yeah, so I think additional the more we bought is things like Harvey Norman. We've seen the share price has rallied aggressively into this result, and all of us always feel a bit nervous ahead of
Yeah.
Harvey Norman result.
Oh, you liked it ahead of the result.
That's right. And then, but the thing is, after result, we continue to add to it because it's still too cheap. Earnings momentum very strong. It's like for like sales is almost good as JB's, and JB's is double its earnings multiple. So it looks really attractive. We actually bought more Adair's when it had the downgrade in May and June. So the result, yeah. So I think because it's that whole housing market, has really turned the corner. So housing related retailers are looking, really interesting. And I think next 12 months or to 2 years, these guys will be continuing in the upgrade cycle. Other companies that looks interesting is that, for example, realestate.com. I know the share price hasn't performed much, but result was incredible. And we've seen the housing turnover is now picking up. So the listing is going to be very strong as we head into spring. So I think this is one stock that hasn't really performed as much because people worry about the co-star and the like. So that we added more to this company.
But have you thought through whether AI will be good for REI or bad?
I actually think it'll be good for REA because it really helped them to collect information. It helped them to get access to data. REA is the one that has all the data, and REA is the one that has all the relationship with everyone, and it has all the reach. So I actually think it gives them the ability to really data mine to see to explore the value of the data they have.
All right, now I know you have to go to a meeting, so what we're going to do now is just quickly what you might call speed dating on stocks. And then what you say is whether you like it or not like it.
Sure.
Resmed,
Like it,
Aristocrat,
like it.
Sonic,
Don't, not.
AMP,
I'm neutral.
Next DC,
I like it.
I knew you say that, and
Which one?
Wally.
Oh, Wally. I quite like this one. Actually, this is the one I did add to the portfolio. I think it looks very reasonable price, and then given this pipeline, actually looks very interesting.
Yeah, one last one, Pinnacle.
I like it. Share price actually has come off in the last week or so. Get caught in the transition flow, the market flow, and things. I think actually the company's tracking pretty well.
Okay. Now this one I don't want you to give me an answer on, but I want you to look into it. It's called ABX. It's a very small rare earth company. The Sydney Morning Herald talked about it last week. It went up about 18% last week from a very small price. But I know a guy who's a shareholder, and he's always pestering me about it. So have a look at it, and we'll talk about it in a couple of weeks' time.
Sure, that would be amazing. Thank you.
Now, Paul Rickard of the Switzer Report, and we're going to discuss where the money's going to go when the big fund managers and the smart investors sell their big cap stocks and start looking for the small cap stocks that have unbelievable value. Thanks for joining us, Paul.
Thank you, Peter.
I was just talking to June Bailey, and I was talking about the rotation, and she feels like the rotation out of the top 20 is starting to pick up pace now, and primarily because reporters season is showing a lot of the smaller mid-cap companies are actually doing quite well. And she pointed out Harvey Norman for it.
Yeah, I think you've got a bit of rotation to carry, Peter. It's hard for a fund manager to move a lot of money because they simply just can't get the liquidity. But I think there's a bit of on the edges happening. We've seen it, for example, in a stock like CBA peaked at about $191. It's now 167 ish. So it's come down. Yeah, it's a 15% pullback in a market that has basically or not far off highs.
Yeah.
We're starting to see a bit in Telstra.
Yeah.
So it's back in the 480s to just under $5. I think we're sort of seeing it a little bit. Some other stocks that are probably is due for. A stock like Wesfarmers had a fantastic run up. A lot of supportive things in terms of lower interest rates, but very expensive. Trading on a P of 37 times. Like it's not growing at 20% or 10%. It's growing at about 4%. Right?
Yeah.
And you've got something on a P of 37 times. So I think we're starting to see that, but you're just going to have to be patient because it's hard for the big managers of funds to actually move that.
Just for people who aren't as sort of technical as you, but when you got a company that's got a PE of, say, 30, I've often said, well, that's like a 3.3% return, isn't it? It's like dividing 30 into 100. And if the share price is going up by 15, 20%, that's really out of whack, isn't it? Because the rise should be somehow related to what the real return is.
Yeah, I mean, look, it's all right to have high PEs, but you expect that the company to be growing its earnings rapidly, because that PE over time will come down as the earnings go up.
Yeah.
But when the earnings are just sort of meandering along, which they are in the case of a stock like Wesfarmers, and it's not, this 4% is not new. It's go back over a decade. It's a nice, reliable earner, right? A bit like Telstra, maybe better than Telstra. But that PE is super high. It's super high compared to where it's been historically. So I don't think the world's about to go and panic and sell Wesfarmers.
No.
But I do think we talked about these quality stocks like CBA got overbought.
Yeah.
Eventually the market decided to sort of ease back.
Yeah.
Like Telstra, I think we're starting to see in a few others at the moment, Pete.
Yeah, and it's kind of like, it's like the rotation that had to happen. CBA's share price was ridiculous. When do you think people should buy back in, Paul?
Well, I think we're starting to see CSL find a bit of a bottom. Now, if you want to talk PE, it's sort of PE of about 18 times.
Yeah.
If I go back and sort of plot us the PEs of Wesfarmers versus CSL, you've gone like that, right?
Yeah.
So CSL used to be at a PE in the 30s, but it's still growing earnings at 8 to 10% per annum, and it's now at a PE of about 18 or 19.
Yeah.
So I don't think there's going to be a huge rally in CSL, but I think we're starting to see some work. It's interesting. It's one of the shares that's up to date.
Yeah.
In a softer and quieter.
That's a case of a good quality company that's probably been beaten up too much. And even though the analysts might be too aggressive in thinking it can go back to 300 anytime soon, you feel as though there's a lot of headroom to make a bit of money on a company like that. What about, so I mentioned the banks and CBA, and it's a very hard question, but do you think at 140, 140, there'll be a lot of buyers again, Paul?
On CBA, yeah. I don't think CBA is going south in a big way,
No. But 140 still is a big price.
Yeah, but if in a market rally, I think it's going to get left behind, and I think we're slowly starting to see the money come out a little bit. There has been a lot of retail selling, and now it's institutions just edging down a bit, and I think that's why it's not really rallying as hard as it has done.
Okay, so you got Wesfarmers, you got the banks coming off the boil. The miners seem to be going up, so the top 20 stocks, but they didn't do well in the past.
Yeah, I mean, BHP's 42, 41 something today. Look, it was in the 50s not so long ago. It's come back.
It was low as 35.
Low as 35, so it had a bit of money going into resources. IT's been knocked down, but we've started to see that bounce the last couple of days. So Zero was down at $150 last week. It's back at 160.
Next to is bouncing.
BC's bouncing back. So I think there's a little bit of rotation. The market is, that's why I'm not, starting to feel a bit like a broken record. I've been a bit cautious from this market. It's at record highs,
Yeah.
and you'd expect a market at record highs. There's lots of expensive stocks around, so
Yeah.
it is harder to find value. But there do seem to be some standouts compared to some very, very expensive stocks.
What's the latest Rickard love stock? 'Cause you always talking about
Yeah.
before, but all right, get over it.
Well, car's doing all right. It's around $40. It's look, over the course of the year, done a little bit. It hasn't been quite the standout that I hoped for.
But did you pick one up during reporting season? Hey, that's a lot better than I expected.
I think you've got to say that some of the healthcare companies got beaten up pretty badly. So CSL, Sonic got smashed pretty badly.
Yeah, analysts like Sonic.
And I think Sonic looks interesting as on the upside. There's a couple of the zeros of the world are starting to have come back to a level where they're more attractive than they were, Pete.
Jimbo Lou thinks Zip's still got upside because
I'd
probably about payments companies.
Yeah, I've maybe that's a sector in need of a re-rating.
Did you keep your Zip?
No, I
You sold out.
bought Zip and then sold out, and I've been kicking myself ever since the last couple of months.
Sometimes you really have to defy your rational fears, isn't it?
Yeah. I mean, South 32 looks cheap. It's had also a couple of downgrades, but it's in some interesting minerals. It's well below where it started the year at, Pete. So I think that looks a bit more interesting, but that's probably a stock for the patient.
Yeah.
It's tough out there to see where the value is, but there are lots of stocks that have been hit hard. You and I have had a discussion around Amcor.
Yeah.
That's probably looking reasonable value in the 12s. Not again.
I can't get excited about
Yeah,
I can do better though. Yeah, I can't get. I give us an excitement stock. Well, how old is what's the excitement stock?
What's your excitement stuff? There you go. I'm going to be interviewer.
Yeah. Well, actually, I told you last week I bought a small minor, and I've actually got Jimbo Lou looking at that one, but I don't want to talk about
That's an excitement stock, but we won't go there.
No,
it's too small.
That's just. I've just bought some because a mate of mine keeps pestering me, asking me about it. But yeah, we'll wait and see. If I get some more substantial information, I might share it with the audience. But I think, Paul, I still like my X20 because that gives me a diversified play on all the stuff that we're trying to find. I like the fact that Jumbo Lou liked Zip. She also liked ResMed. She liked Aristocrat still. She wasn't working on Sonic. She loved NextDC. So I guess that's the one. I love NextDC. I think the future is all about the cloud. They make stuff they're like an infrastructure. They're like a sexy infrastructure stock, aren't they?
They are. I mean, Goodman's in the same category. It's sort of
it's been down lately.
It has been down a bit. So they're all sort of. There's a bit of I guess, profit taking. There are lots of people doing stuff in cloud. You got to say who and in data centers. We need a lot of them. Who are going to be the winners? I think NextDC is going to be winner. I think you got to say Goodman's going to be winner.
Yeah.
But it's just getting caught up in that sort of newness coming to the market. Other people getting into it.
One last company, and this is a kind of boring company that you have a lot of knowledge about, Paul. Being a safe player as you are, Worley. They like Worley now, and you reckon it's because the mining sector's got some upside.
A bit of upside. The company's got to sort of act together a little bit. It's taken.
It really is disappointing.
It's disappointing for so long. Management looks like it's got its act together. That's possibly. I would say that's an excitement stock, Pete, but it's something that's
no, but it's an example of a non-top 20 stock. That a fund manager could easily take profit on, say, Wesfarmers, and buy a bit of Worley, buy a bit of NextDC. That's the kind of thing we're going to see, I think, over the next 6
months. So yeah, stock like Treasury Wine Estates has been really badly beaten up. But it's around $8 or still below.
I'll give that to you. It's a sexy stock.
Yeah, that's a bit sexier. I mean, it's been really hard done by.
Yeah,
and you've got to see fighting on some some headwinds in that market. But that's a stock. But I don't. It's the end. It's not. I don't think it's about to bounce tomorrow, but it's one for the longer term, I think.
Yeah, okay, great stuff. It's Paul Rickard of the Switzer Report. Thanks for joining us.
Thanks, Peter.
And now I'd like to introduce Andrew Wilson from a company called Rail, involved in the process of making us more savvy when it comes to the subject of artificial intelligence. Thanks for joining us, Andrew.
Thank you for having me, Peter.
All right. Everyone is interested in AI. the trade union movement, the government are worried about the misuse of AI, irresponsible treatment of AI, and getting rid of workers. And you come from a group called Rail. Tell us what Rail is and why it's going to be an important player in the AI space.
Yeah. So RAIL stands for the Responsible Use of AI License, which is a platform agnostic, broad-based foundational literacy training in AI tools and technology, ethics and so on. And the reason that exists is to help people navigate between all the hype we see out there and the fear.
Yeah.
And unfortunately, selling fear and selling hype has a lot of supporters in each of those camps.
Yeah.
And there's not too many people helping to navigate that space.
Okay. So for people who don't really understand how it works, people buy a license to use an AI product, right?
Yes, in many
Yeah.
cases,
Yeah.
they might use
Some
it.
people get the free use of it, but
Yeah.
you obviously, if you're talking about licenses, we're talking about businesses, aren't we? That
Yes.
all right. And your fear is they might either use it well. No, not so fear. Fear would be misuse it. Your hope is that they will use it well.
Yes, and use it responsibly.
Give us examples of misusage.
Okay, so there's a famous case that came out fairly early on where a lawyer in the US presented case law to a judge that didn't exist. It was a hallucination from ChatGPT, and he was rightly castigated by the judge.
Yeah.
That became fairly high profile of one of the more public incidences. But we see that happening all the time in workplaces. We personify a character called Dennis, who's the cowboy, who says, "Oh, what mate? I threw it into ChatGPT," as if he's done his job merely by prompting the machine and getting a response.
Yeah.
And so we see examples like that all the time.
Okay. Are there misuses you worry about that could be bad for individuals? That in a sense scam merchants might use it or whatever. And
Yeah.
I'm operating in the dark here, but I know of some situations like my own voice was impersonated in an ad that wasn't me whatsoever. And I guess a lot of that was done by AI.
Yeah, and that's absolutely a real risk, is that there are more and more tools available to people to professionalize their scams, essentially.
Yeah.
And so there'll be then AI detection technologies designed to fight those. And so those things tend to kind of ratchet up against each other. But it is a genuine risk. And there are certain things that come down to human training. That is, how do you determine if it's your parents calling you saying, "I need you to transfer me money because something's happened and I can't access my bank," in an era when AI can clone their voice print very readily.
Yeah.
And your voice has much more to train on because you're a public figure,
Yeah.
with hours and hours of YouTube. But all it takes is somebody misdialing a number and saying, "Oh, sorry, I got the wrong number," but they picked up a few words from you to train on your voice,
Yeah.
and then to use that against your family members.
Oh.
So the sort of use cases that we are concerned about in terms of personal impacts are things like people feeding data into the machine that they shouldn't do.
Yeah.
And people using, the major players would argue they should be trusted, but then major players have often shown breaches. We look at Optus, for instance, and whatever security protocols they had in place, and the AI vendors are not immune to those sorts of attacks. But what we see is the risk of people feeding in sensitive information, which is then released by security breaches or training the models, or any number of ways that people's data then gets used and manipulated.
I suspect you're a very brave person, Andrew, but are you worried about what some bad people will use AI for?
Absolutely. Yeah. And so I think for me, I personally, and as an organization, we sit between the hype and the fear. And I realize that there are some very, very bad things that people will be able to do with AI, just as there has been with the internet. And yet there's some amazing things that have been done with the internet.
And the thing is and we know the internet has delivered productivity gains, extraordinary productivity gains. But the misuse of AI is really going to undermine all of that productivity because some people will refuse to engage. I know I've got a financial planning client, a very wealthy lady who is really scared of using a Macquarie authenticator, which has been created to
Specifically to keep us
to
safe.
protection.
Yeah.
But she's worried that once she's in that authenticator space, a dummy for authenticator might come along and all that sort of stuff.
Yeah.
And it's all possible. She's probably being more cautious than she needs to be. But the stories are all out there. And so it's going to undermine productivity if a lot of people aren't prepared to play ball.
Yeah, that's true. And so I spoke about the cowboy character before. We have the resistant traditionalist who says, "Oh, I'll never use AI because I'm worried about it."
Yeah.
And what will happen is we'll have to learn to navigate that space in between. So many years ago, people had concerns about the internet, and some of those have proven to be valid.
Yeah.
But these days, it's very difficult to operate in a professional environment saying, "I'm not comfortable using the internet."
Mm.
And so we think that AI technology will be similar to that, is that people will have to get a level of personal comfort, but that we need some guardrails in place from a regulatory perspective from governments
Yeah.
and within the organizations themselves as to what responsible AI use means there. Things like keeping a human in the loop so the AI never makes the final decision on something.
Mm.
So with credit decisioning, for instance, it needs to be explainable and have human review in terms of that process. Even I was talking to the vendors that provide the traffic safety cameras for seatbelt detection.
Yeah.
The AI highlights a photo that a human reviews and says, yes, we think this represents a breach, and then they're issued a fine. So keeping humans in the loop for important services, making it explainable, transparent when it comes to government, all those sorts of things. I heard somebody say recently that imagine how fast you could drive your car if you didn't have any brakes. Because people think of brakes as slowing the vehicle down, but in reality, they allow you to drive much faster knowing the brakes are there to catch you. And so we think safe AI policies and training, etc., form part of the brakes that allow you to travel at speed where it's safe to do so, and then to put limits on things where it's not safe to do so.
Okay. Is rail a private organisation or is it government supported? Well, what is the background of rail?
It's a private organisation, and I'll give you one example why. The speed with which the market is changing doesn't align with government's timelines for learning training.
Yeah.
So the organisation,
Rails figure prominently in government performance.
those will be your words, Peter, not my
There'll be a lot of my words like that. Now, here's my other issue. And this is on the record because people are going to watch this, but are you worried looking at the performance of governments, not the same federal and state companies, when it comes to innovations in the internet space? And let's talk about Airbnb, Uber Eats with guys on bikes, on footpaths. Like, no government seems to be interested in doing good old-fashioned regulation. And you're a regulatory, we hope to be a regulator, a private regulator, aren't you, with your name, Rail? Are you worried the government's really going to will potentially be slow out of the blocks and lots of problems will happen before someone says, hey, this mob here, Rail, we better start listening to that?
I think that's a real risk. And we need to obviously recognise that governments move slowly because of the complexity. However, it's going to be 2028 before there's an
Donald
AI.
Trump has changed that. And I'm not a Trump fan, but Trump has changed what governments can and maybe should and shouldn't do. But yeah, historically, you're right. Governments have been slow.
Yeah, and I think if we look at it's 2028 before you'll be able to do the Australian qualifications framework will have a course in there around AI, certificate 1, 2, 3, 4, whatever.
All right, okay.
2028, right, before you.
And you guys will be doing education courses.
We're already doing the education now, and the government has identified that one of its first priorities is to catalyse the development and delivery of non-accredited courses because they can't deliver the accreditation frameworks fast enough. And so we're filling that gap in the market. Whether we're still doing it in 3 to 5 years will be another story.
For are the trade unions supporting the existence of someone like you, or will they have rivals to you?
They're not at this point. I think they have. There's a lot of posturing from the trade unions there because they see it as a threat to their workers. In some cases, rightly so. I would argue they would better serve their members by helping them develop the training and skills to work with AI in their jobs because they're at more threat of being replaced if they don't develop the skills to work with it.
Okay. So in a perfect world, if you could get all the marketing out there that's really in your interest and in the interest of people who should be using your skills, how would you talk to that potential market right now?
So we would say that for organizations who are primary, we're not selling the training to individuals as much as organizations, is that many of their people are already using it. So one of the recent studies I came across said 77% of the individuals, including staff and volunteers in this industry, were using AI. Only 12% of those organizations had policies around the use of AI. And so we would say your people are already using these tools. Everybody's saying, we know we need to do something, but we don't know what. And when it comes to digital transformation, it's always people, process, technology. The people are already using the tools. You need the fundamental training to put the guardrails in place so they know about data security, privacy, ethics, and so on, as well as prompt engineering and other practical skills, so that they can minimize the risks which are already the organization is already being exposed to, and then capitalize on the opportunities as well.
Yeah. Well, it's a big subject. I'm sure I'll talk to you again, but at this point in time, if you had one piece of advice for business owners who are listening to this right now, what would you say to them?
I would say you probably grew up on case studies of Netflix and Blockbuster. Don't be the Blockbuster in the Netflix era when it comes to AI.
Mm.
We recognize the principle there, but it's hard to apply when we have all the reasons not to change. But as I may have said earlier, the chat is out of the bag. We're not going back to a pre-AI world. It's incumbent on individuals and businesses to figure out how to embrace it appropriately without buying into either the hype or the fear.
And what would you say to consumers who potentially can get benefits, but also can be screwed by AI practices?
I would say be very conscious when the government talks to you about its use of AI. And demand transparency and accountability with those things, and I think tighter regulation for the industry overall. But I think when it comes to personal use, just be mindful of what information you're feeding it. And if you are already using ChatGPT, for instance, that's the most common one, is ask it to do an assessment of your personal skills and weaknesses and have a look at how it responds to you, and then think about how that information could potentially be used to steer you in a way that benefits the organization.
Very, very interesting. Andrew, thanks for joining us.
Thank you, Peter.
And that was Andrew Wilson of Rail. Thanks for joining us. Now, don't forget, if you really want more insights of the caliber of this show, you really should become a subscriber to the Switzer Report. We have many experts there that really don't, or who don't feature on this program. And as a consequence, there are more insights that you can get by being a subscriber to the Switzer Report. But if you just want to find out what I'm saying every day and thinking every day about the market, just try going to switzer.com.au. That's the program. Thanks for joining us. See you next week.